Welcome back to another exciting episode of Hedge Heads. John, what are we talking about?
Well, the weather's warmer, so we need to start talking about plantings, prospective plantings, and then I definitely have recommendations for cash in the soybean side of stuff. And, we'll dive a little bit into cattle, and I want to talk about hedges there, or I want guys to talk to their guy about hedges there. Those are the two markets that I think are pretty important here.
Let's go.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, spring is in the air. A couple of beautiful days. The snow's been melting. I think planters are going to roll any minute, huh?
Yeah, there's going to be panic in not too long on the grain in the bin. And this has been my theory for the last couple of years. So guys are storing it and they want to store it towards spring, which is totally normal. You got storage. Looking for better markets. This time last year, we were at $5 in corn, or very close to it, if not on the way. I don't remember the dates exactly, but we hit 5.12 in March. And there was some excitement in the air. We had 1.2. We were looking forward to the spring because we didn't know we had to have a big corn crop, which it looked like we're going to have a lot of acres. And it felt different. Like now we sit here, I'm anxious for spring, but you talk to a producer and I don't feel that coming from them, that everybody's just gearing up and really excited for what's to come this year. Everyone's still struggling with old crop. As times marched on, old crop's getting sold. I think a tremendous amount of beans just got sold. I don't know that, just judging from the phones. I would expect basis to weaken up there. But my point is, we had this all to look forward to, and there was a glimmer of hope last year. Even though it was fleeting, as we saw, it completely collapsed at the end of February going into March. But still, we had a good insurance guarantee for corn, and there was at least some question. Now, as we roll into spring, it feels hopeless. That gives me a feeling that things are going to change, just because, the feelings get extreme and markets tend to change at those, but it just doesn't have that same feel. In the next 2 weeks, I think most of our snow is going to be gone. Talking to the guys in the east, they still have more snow than us. They also said, we have a winter like you have. And they were proud of themselves because they had a winter like we had a winter. And I guess that's something to be proud of, because I don't know. No one really wants these winters. We have them. But it was hardly noticeable here. Other guys are still cold, digging out from the snow. But it won't be too long before those planters are rolling. And again, I don't feel like it's a real positive in grains. Guys are going to feel like they need to make sales and raise capital for planting this season. But the outlook is just so doomy and gloomy.
Yeah, it's, it is important to remember it is only February 10th.
Yep.
Just because it's 40 degrees out today, it doesn't mean that's what it's going to be next week. And that's here, like you said, we're here in the frozen tundra of Minnesota. It's just after a couple weeks of negative 20.
Yeah.
Gosh, it sure is nice to feel 40 degrees.
Yeah, it feels tropical here. And I always get itchy this time of year. I feel like I want to do something and get going. I should do, I should be constructive and do stuff at home and home projects. But it's past that. It's like you want to get outside and start doing something. And then, like I say, the panic kind of sets in when the production's so high. If the production was lower, spring was a time to look forward to as the battle for acres would begin. You'd always have one like soybeans need these acres and corn can't take this away from soybeans this year, or corn's going to need all the acres because we only have 1.2 billion carried over. We don't have any of that this year. It's the battle for who doesn't want to plant what. Cotton's fallen out of favor, soybeans, corn, and wheat. You just don't see all five of them fall out of favor, completely in a year. But you're seeing it now.
So what do you do? I mean, when you're talking to guys,
this
what
is
do you do?
exactly, and that's what I planned. This is exactly. So what do you do? Do you just sit there and feel sorry for yourself? No, I mean, this is the way the markets used to be. What's different now is the inputs are way higher. So what do? You call and you visit with me, and we come up with ideas. Like in a lot of them are shorter term, not necessarily even like during the day, but like you see these swings. So what am I in? Hog spreads, cattle spreads, cattle options, soybean options. Very little on the corn side, but a little bit in the corn side. So a little bit in all markets. A guy needs to keep, like your old high school football coaches say, keep those legs moving, keep those knees moving. You have to go forward.
Stick and move.
Yeah, I don't think a guy rolls on stick and move. I got stuck and move. Between the Zim twins and Prischmann, I mean, it was all that a guy could handle in football practice. I would have liked to be in one of those guys that ran over everybody, but no, those guys just ran over you in practice. But the coach always used to say, keep your legs moving when you're in the pile, and you have to. I mean, you can't just roll over and give up. Sure, you can go on Facebook and vent, which people do daily, about the frustrations of all this, but it's not going to make things better. So how can you improve your situation? I like the little swing trades. 3 days up, sell. 3 days down, buy. I mean, I'm really simplifying what we're doing here.
There are patterns out there, though.
Yeah.
You could need to identify them, but the simple,
Yeah, so if you're short corn, you're looking for $250 instead of, $1,300. You're not looking for that 25-cent move anymore. You're looking for that 5-6 cent move. When I first started commodities, oil was $11 a barrel. I mean, and if it got to 12, that would be a big deal. You adapt and you make do with what you're given. Guys with high costs are saying that's not helping me. But you don't know. You haven't even asked. I mean, maybe there is ideas that can help you, and that's what you're looking for. So what do we have for old crop? Recommendations to sell, old crop on rallies like we just got in beans. That's all you're really left with old crop. If you aren't selling old crop like on this bean rally, then you're waiting till spring or summer weather to have higher prices, or a political tweet like we just had. But we just had a rally in soybeans, and the phone's been really busy. So you just break down that market and start finding things that you can do, even in old crop, to help your case. And you kind of ignore the market like corn that just simply goes sideways or does nothing. Right. You go to where the hot action is, and by hot action I mean 56-cent rallies in soybeans. Wheat. Not too long ago, Kansas wheat was 18 cents under Chicago. I don't know. I haven't looked, but it was 5-6 cents over here recently. So that's a 23-cent swing from low to high, and you can maybe get 15-16 cents out of it. I think we got 10 cents out of that when it did happen. But those are like the little strategies that fall through the cracks that guys don't look at. That's what you should look at. And again, guys fall back to swing trading and little things where you're trying to make 5-6 cents a little bit at a time and not take a lot of risk. Back to 1999 when I first started, that's what you had. I mean, you just dealt with it. You had a sugar position. I remember a lot of sugar that I used to do, the world sugar market, and you'd shoot for a $325 profit. Or if you're in a cattle spread, $175, $225 profit. That's the kind of markets that we're in. Although cattle's not in that market right now. I'm just saying the grains are.
Right.
Yeah. Corn goes down, sells off to that $495 level. Guys are selling puts down there. Not at $495, like $480. When it gets down to those levels, and just play the ranges, I guess is what I'm trying to say. I mean, what do you have for suggestions?
Well, that's why I asked you, because I didn't have a lot.
Yeah, and no one does. I mean, it's common unless you're staring at every ticket every day. It's gonna be hard to come up with ideas.
Yeah, I do think it's important to try and find those swings, those little swings, anything that you can add to the bottom line.
Yep.
But I also think that it's important to remember that as a producer, you're perpetually long.
Yes.
So when you're making those moves or trying to decide on what those little things you're going to do, just keep that in mind.
Yeah, you don't want to be piling into calls on old crop. The only reason why I'm entertaining those September calls this year, and I've been talking about them, is because I don't want guys to give up on the upside in corn. On the new crop corn, I'm talking December 26th. I want to keep that upside open-ish as long as I can, and I certainly don't want a guy to get bored and start shorting calls. And then, this price could never get here, or I'd be happy with this hedge if it got here, and then short 20 bean calls. This is not the time of year to be doing that. Yes, you generally have a February break because the world beans get harvested in Brazil, and we have a lot of competition. But overall, going into spring, many, many different surprises have happened over the years, from Ohio Valley flooding out completely, and I think that was 2016 maybe. I don't remember that year for sure. What I can go look in the chart, but it looked like it was going in perfect, and then it just kept raining in Ohio and raining at the Ohio Valley every day. And next thing you know, we had a very sharp rally. Now, it didn't last long.
I thought rain makes grain.
Not that. Well, it eventually did that year. But, of course, the panic set in. 2019 was another year where there was just simply way too much rain. That was the first legitimate planting delay, too much rain, and then stayed that way that I can remember. I mean, it was a disaster. Now, unfortunately, the prices didn't reflect that right away, but eventually they did by 2020. And went up much, much higher. So what I'm saying is, in springtime and going into early summer, this is about the last time you want to cut that upside open, on new crop sales, and then just walk away from it. Because over the last 2 years, you could got 440 futures for your cash corn. Futures. Like right now we're below that, but I'm just saying more or less like 440 has been a very common number, wouldn't you say?
Yeah, absolutely.
Okay, so you look at December 26th at 450 something, and the panic is that we're going to get 96 million, 97, and it's going to go way lower than this. Now, we haven't seen that. So what I would do is take my chances, and back to, there's sometimes markets there's not a lot you can do in. What's damaging is getting heavily short, like options, with the idea it can't get to these levels. And if it did, I'd take those hedges, because markets tend to turn. And if they're going to turn, it's going to be in a time of year like now into the second week in June. So of all the times of year, this is where you want to have the upside open. But in the same breath, literally, I will say, if you're profitable and those numbers work on your farm, there's nothing wrong with locking that in. What I'm saying is, if you do that, give up a few cents to the bottom line to reestablish that upside open in some area. You don't want to just roll over on this. But what do we do in markets like this? Back to that, because that's what we're talking about. Again, you stick and move, and then move on to the next thing. And I just listed all the things that I'm in right now. So it's not like I'll get a call and like, boy, you must be doing nothing. And the truth is, it actually remains pretty busy, kind of year round. More or less, there's windows where there's a lot more to do. But if you have spreads, you have options, you have option spreads, and you have futures, and then you're dealing with hedges, it actually covers quite a bit of ground. And then you have outfits that do what we do, and they sell crop insurance in addition to that, and LRP. And I've always thought, I have no idea how they could possibly juggle all that, whether they have dedicated agents in those brokerage firms. I don't know, but it seems like just this amount is plenty for a guy to handle. So there is stuff to do. You just simply call and check in. I mean, that's how you get involved in the markets. Hey, what's going on? And I'll say, hey, there's nothing. This is kind of a dead day. And then we go back to last week. There was like 10 different things that we were looking at. So that's really the long story short. Sometimes when there's nothing to do in hedging, you try to look to improve yourself with little trades. Try to hit those singles, try to hit those doubles, and then wait for the better stuff to set up.
I'll just run a quick ad for our brokerage,
yes.
Blue Creek Commodity, and say, there are many days where I walk into the office and say, John, what are you looking at? And he says, there's nothing to do. And I think a lot of guys think brokers just tell you to do something, because then you make money.
And I think there is a lot of them out there like that.
the number of times that I do hear you say there's nothing to do.
I have a client, and he said, I've never seen a broker talk me not out of more stuff or like not try to talk me in. Like, I don't remember the way they phrased it, but it was just like I like to lay it all out there and then let you decide, because I'll never, if a guy calls and I want to buy a call on corn, I won't be talking out of it. There's no way I could possibly know what the next few months entails. What we'll try to do is get the best month, get the best time, and break it down that way. I had a client call me yesterday afternoon with a complete curveball. He went, I can't remember. I think he went long crude oil and short unleaded, which is an energy spread, but it was kind of came out of the blue. He thought he saw something where unleaded was going to be weaker than crude oil, and he simply called. And again, I'm not going to sit there and say, don't do that. I just wasn't familiar with it. I wasn't following it. He woke up this morning, and he's pretty happy that he did it. But you never say never to a guy's idea, but you try to steer him towards something reasonable. Instead of maybe buying a March put, I'd probably try to talk a guy into at least getting a September put so we can have the weather involved. That sort of idea. So that's where we come in, to try to refine the ideas and not talk guys out of doing what they want to do, because, again, nobody knows where the markets are going, and you just try to steer guys, in more helpful ways. And then we're going to talk about other markets. I mean, there's definitely been markets that are moving. The problem with this is the ones that are moving are way too high risk to get a lot of people involved in, and that's silver, gold, Bitcoin. We have all the Bitcoin, Ripple. You have all the micro futures here, so you can get involved, but they've been very volatile and unpredictable. Cattle. So the markets that are moving.
I mean, cattle and Bitcoin share a lot in common right now.
Yeah, they're just moving a little too much, or they're too big of contracts.
Right.
So it's just one of those things. But we're every day trying to make the hedges better. From what I'm understanding, not a lot of guys are doing anything, like just in general. They're making cash sales. That's what I'm understanding. But commodities change fast, and things will change even by next week.
Well, you take a look at, the same thing. We were bemoaning the lack of movement in December, and January ended up crazy. Now February's starting slow.
Yes.
It would not surprise me that something happens here in the next week or two and it's going to be crazy again. And that's why you need to have those plans in place.
Yep.
And also why I enjoy watching the outside markets. I mean, really, crude oil has been an interesting market lately with a lot of big moves.
Yeah, and that's a perfect example of the kind of the stuff that we're in right now. It's normally a little more predictable once you get down to this level, but honestly, crude oil could go either direction very easily and very fast, and that's exactly what it's done. Yep. It's zipped up, and then it falls apart, and it's kind of got a different flavor every day. So as we go into springtime, normally I would say, hey, let's look at, for hedges on the energy side, let's look at maybe selling some puts, collecting that premium, or go long if we got exercise down there. But you really can't count on it this year. It could go lower. Politics are very involved in commodities right now. So it's really hard to stick your neck out, be confident, and not have a lot of risk when you're one tweet away from something completely changing. There's going to be a lot of guys that sold beans. That one guy on Twitter actually was pretty funny. He stood out. He said, right before this thing took off with the Trump tweet, he said, I finally just sold the rest of my old crop beans. You're very welcome. The market can rally sharply now. And the next day it actually did.
It did.
So I like to think that guy, I can't remember who he was, but I did read that, and it did do that the next day. But you see how fast it can change with a tweet, and it did. So what are we doing in beans right now? As a matter of fact, I just sent, or I am sending an email to the Hedge Heads Insider subscribers. So you will see an actual email today, and then it is a little bean position that we're looking at. So
let me guess, you're selling all the calls and buying all the puts.
There's one thing I don't do this time of year is sell bean calls. Yeah. And I'm not saying you shouldn't do that. It's just something that has not been a great experience over the years for me in between now and August. But the bean market is different. different than it used to be. We used to have such tight ending stocks. Like we would sell out no matter what going into spring.
It's kind of like bear spreading the July-November bean spread.
Yeah,
it's just you're better off watching than bear spreading.
Yeah, I was willing to ride it up, and some guys did here recently. But then a couple guys are like, "Oh, if you think it's going down, let's short this thing." Well, I have a problem with that. I don't like the long leg, which was November 26th, and I don't really like the short leg. That's very similar to the wheat corn spread, although that did work. I didn't like the corn short, and I didn't like the wheat long.
Yeah.
That did end up working, but no one really got in it this year. So if you don't like either side of the leg, you should probably just skip that one, even if it works. And that's where I kind of am in the beans. The problem with November 26th is everybody thinks production is going to be high. And then we don't know what's going on in July.
I just need more than 81 million acres, so I don't have to hear you say 81 million acres.
Yeah, it's almost over. First of all, almost all the old crops sold. We're getting down to where there's very little. And we're going to have more than 81 million acres next year. Well, I never say never. But it is sad, though.
You heard it here first.
Yeah, it is sad, though, that we did plant 81, which is a exceedingly low number for soybean acres. And we still are in the market that we're in. You do see how flinchy it is. And it does want to go higher. There just really is no fundamental reason using the USDA's numbers for it to go a lot higher. And then that does remind me when I said flinchy, one of the reasons why I keep going back to, if you're making new crop sales, December 26 corn or November 26 beans, that it's important to keep the upside open until about mid-June. And I want to do that via calls, but is because you can see how the grain markets actually do want to go higher. It does get bored. And if you can't make money pushing it down, well, Wall Street will push it up, and that's what you just saw in beans. The momentum traders. So the will is there. I mean, they want an excuse to buy this thing, and you can feel the personality of the market, like it. With gold and silver doing what they're doing, and everything kind of moving higher here. You can feel grains want to be that undervalued asset, and it wants money to pour into it. It just still goes back to the fundamentals. There's just nothing to push them in. You get a Trump tweet and look at the reaction that beans had, assuming that they aren't buying. I'm just saying, you can tell this is in a flinchy mode, a really flinchy mode. So I want to be a part of that in corn. I don't want to be missing that. Meaning I don't want 455. I want that, 490 if it comes here, because that 35 cents, 40 cents is going to be a huge deal this year.
Big deal.
Yep. So that's where we are in the markets.
Let's talk. I mean, you brought it up a little, but let's talk silver, because that's been the media darling, and now it's pulled back, but it looks like it's going range bound, very much higher than it has been.
Yeah, it's gotten.
I think, what are we, 84, 85 range now?
It's gotten. It's spun around again today, though.
Has it?
Yeah. So it's down about 2% today, holding that 80 mark. Just above that. That whole thing, for about $40 off the highs. That whole thing was what it was, and silver is cyclical like this, and it is. Now the $1 million question is, where are we going in the metals from here? I have gotten calls. Should we do this? Should we do that? Let's look at puts. And then you start quoting some of the prices on the stuff, and the interest wanes really quick.
Do you want to talk about the one put that obviously not here, but one put was purchased for, what was the cost of a put?
$62,000 for anything, anywhere near the money.
62 grand.
Yeah, just to give you an idea. Yeah, what it
for
would
how
cost
long?
you.
What kind of time frame?
I think it was May. It wasn't even that long.
Oh my god.
No, it wasn't even May. I mean, it was less than that. So yeah, you're looking at just an incredible amount of premium for this. So you think to yourself, well, if you can get that much premium, let's look at selling silver puts or calls.
Right.
That's just an incredibly bad idea. And I won't even comment beyond that. It's like, this has no limits. Do you like sleeping? Because if you don't, then maybe it's for you.
It's not just not sleeping. It's just better sit there with your finger on the trigger, just waiting.
And that probably won't even work. It's probably when it moves that fast. Yeah. It's just a very dangerous market. So let's get into the mini contracts. Well, the mini contract for silver is still 1,000 ounces. There is no small silver contract. There is for gold and everything else. But as time's marched on here, I've been doing this for a long time. A lot of the old metal traders have kind of aged out of being in futures. The real diehards that would call every day. And then I feel like a lot of guys have moved into physical. I don't think that any less interest. I just think that more has moved into the physical because as the price has gotten, I think the last real like push in metals I had was during COVID, and then that huge downswing I think hurt a lot of guys. I think platinum went in the 600s. I was in Florida at the time, and it was like 665, and then everything pushed down. It's just the volatility and futures have knocked a lot of guys out, and platinum was great though. Like that was something guys were still in. Gold, to a degree. Silver, a little bit, but still the old glory days of metal trading. The older gentlemen here in the countryside around this area they've aged out. And the younger guys are Robinhood and ETF and Bitcoin. It's just a different thing. But in the physical side of stuff, just tremendous interest in those markets. I still like futures better than the physical because like when it was at 120 or whatever the high was, you just simply press a button and you're out. You go try to sell your physical silver, go ahead and load it in the truck, get down there and then see what they're offering you. You're going to be really disappointed. Not only that, if you have rounds, you have bars, you have a lot of different assorted stuff, junk silver, which is basically, the older coins that were minted in the United States, like pre-64. You're not going to get the price that you saw on the board at all.
Right. And you also have to store it. But there is something very nice about having the physical. It feels good.
Just like Scrooge. Feels good. Just like Scrooge McDuck.
I know. That's how I start my day, is swimming in my pool full of silver coins. His were gold. He was richer
that giant vault, and the little ducks would play in there with that little whatever their names were, and they would ski down the gold coins, and it was just full.
That's how I start my day.
People do like that, and that is the pull of the metals, and it's been that way for thousands of years. It didn't just start. It's people physically like to touch it. I'm in the camp of like if the whole thing melted down and it was silver and gold was the currency, I think you're going to want probably guns and ammo more than gold and silver, just because
but I can make silver bullets.
Yeah, let's say you're Mr. Johnson in town and everybody knows you're a gold and silver guy and you've been collecting for many years. Then the world melts down. Where do you think that the starving hordes are headed to first? Mr. Johnson's house.
The grocery store.
Yeah, so you better have an army.
Then Mr. Johnson.
Yeah, you better have an army if the world ends and it is that bad. But still, it's a store of value and all that good stuff. And then back to cattle. Cattle, quickly before we go, is a market that we talk about, but to me, this feels like it's getting really long in the tooth. Is there a fundamental reason for cattle to go down right this second? No, not really, but that's not how futures work. Do they suspect the border is going to open? They have the import program from Argentina picking up, and I think the market realizes that doesn't change the beef demand overnight. But we're going to continue to import. Not that it's the right thing to do, but that's the plan, to import from all countries that we can. And eventually that erodes a bull market. So the bull's argument is that it's a 3-year cycle and we haven't even begun expansion. Thus, that's why they bid them to any amount of money in the sale barn. But then the reality is there'll come a price where box beef's not moving and we might already be there. So then it goes to the packers. How long can they take these losses? And then the argument begins. What, do you feel bad for the packers? No, I do not. It's just eventually you can't operate a business indefinitely. You'll have some guys thinking they're still making money. Who knows what is going on there, but they definitely aren't making money on paper. And how long are they going to pay up for these cattle? All $1 million questions. But the reason why I think that hedges need to be discussed, and I think I would make it a priority, is that this is the level it failed at last time. This is the level that the box beef started waning. Seasonally we start, so it just makes sense. It makes sense in every regard except for the physical numbers of cattle. Obviously still very tight.
Plus my puts just expired, so I'm out.
You need to get the next round. Now, what are you buying? You buying August? Are you buying? I put something out for the insiders and it was in the September timeframe. That's where I was. And you can guess what market it was, feeder cattle, because live cattle was in September.
I was in the Feb from back in October, and the stick and move, multiple times I should have got out.
Yeah.
But chose to wait, and it did not pay.
No, it did not. It did not pay.
So I am looking for the next target. It was never enough to say, yes, you should definitely take this off. But that's been the markets lately. Like, take your $200, that's enough.
Yeah, just lower your expectations. Exactly. It's just not going to pay you a lot of money, and that's the market that we're in, and then it tends to reverse. Of course, that's not for every market. Other guys are probably killing in this market. There's going to be guys that are just geared for this chaos, this just random, super range bound stuff. So it's not like guys can't make money and good money, but it's an unpredictable thing with a lot of politics. So I'm going to leave you these two things. Talk to your guy about cattle, like in Hedges. And I'm not saying that it's easy. We've talked about this, very expensive, and soybean on old crop. I definitely recommending the cash sales, not on the future side of anything. You got to move these beans unless you believe that the Trump tweet is indeed true and China's going to buy a lot more. If you're storing beans beyond this time of year at this price, then you obviously think it's either going to get tight or there's going to be weather problems and you want to get a rhythm later in the summer. Just know where you're at on that. I do recommend cash sales. Call it another 10% on soybeans today.
Liking. Is that it for today? You want to leave your number, Jim?
Yeah, I mean we went over what needs to go over in the markets. Again, there's no magic arrow here. It's the markets we're dealing with. I complain about it getting boring, and then about the time we start doing that, then things get interesting again. We did have beans flare up. There is things going on in soybeans. So if you want to know what I'm doing in soybeans, 218-731-1578.
Thanks, John.
Yep.